Cool.
Hello, and this time on the Mortgage and Protection Podcast, Paul is back from Henchurch Lane to continue the conversation on mortgages for self employed first time buyers. Thank you for joining us again, Paul. Are you ready to answer some more questions?
I'm ready. Let's go.
Perfect. Okay, so people would like to know what types of mortgages are available for first time buyers who are self employed. So, any differences here?
Okay, so the same mortgages that are available to employed buyers, really. So fixed rate mortgages, trackers, discounts, variable rates, they're all available for self-employed buyers as well. The key difference really when it comes to self-employed is more so how you prove your income, not actually in the products themselves.
Right, okay. So that's useful to know and good news. Let's move on to this question. This is always a popular one, but in this case, how much deposit will I need for a mortgage if I'm a first time buyer and self employed?
Okay, so the easy answer to that is you're going to need at least 5%. If you can get to 10% or even 15% and onwards, the more the better. That's always the case with mortgages. Um, and it's probably worth mentioning as well that even as a self-employed person, there are various different ways in which you could borrow 100%, but that would be more of a specialist kind of bit of advice that you would want to speak to a broker about in terms of whether or not that is an option for you. So yeah, if you're looking from a conventional basis, get yourself at least 5%. If you can do 10, brilliant. And if you can do even more than that, then great.
Okay, so that answers that and something to bear in mind as well. Just following on from that question, people would like to know what additional fees or costs should I be aware of if I'm a first time buyer and self employed? And it's always useful to know these in advance, isn't it? So you can budget.
Massively, yeah. So a lot of people, they might well get to 5% and think, great, we're ready to go. And then
Mm.
actually when it comes to it, there's associated expenses that they just haven't factored in. But I wouldn't say there's any additional fees as a result of being self-employed. The fees that we're looking to associate to that sort of transaction are going to be things like solicitor costs, valuation fees, surveys, if you're looking to get one of those done that you're going to pay for independently, and also stamp duty if you hit the sort of brackets where that's going to become applicable to the transaction too. Any additional fees as a self-employed person would not be related to mortgages. They would just be related to self-employment. So things like submitting your accounts and things like that. But most self-employed people will already be aware of those things.
Okay, so not many differences there really at all. So that's good news. Let's move on to this question. So, will I need a guarantor because I'm self employed to get a mortgage and throw in first time buyer in that mix as well?
Yeah, okay. So self-employed people, again, it's not something where as a result of you being self-employed, you're going to need a guarantor because of that. The reasons that you're going to need to get a guarantor in place are going to be outside of your employment basis. It's more so going to be related to affordability or even credit, right? So if your credit or your income doesn't quite get you the outcome that you need or what you're looking to achieve, at that point you might employ a guarantor, which is loosely based term. It's not a guarantor anymore, but it's
Mm.
effectively getting someone as an additional borrower or an additional applicant to help you along with the application process to achieve either that affordability or that credit status that you wouldn't otherwise by yourself do. Again, not really as a result of being self-employed though.
Right, okay. So again, good news. I'm saying that a lot, but hopefully
Yeah,
that was useful. But it is,
yeah.
isn't it?
All positive, yeah.
It is really positive. So, are there any government schemes then available to help self-employed first-time buyers?
Okay. So there are schemes available for first-time buyers in the UK, and that will be for self-employed people as well as employed, any types of employment. They're a little bit scarce, a little bit thin on the ground, I would say at the moment. The Help to Buy thing finished recently, which is probably the,
Mm.
the, the biggest one to mention. Schemes that are probably worth mentioning at this stage would be shared ownership. So you don't need to be employed to get shared ownership, access to shared ownership. That's worth mentioning. It's a really good place to sort of bridge the gap between fully renting and fully buying. If you can't afford to achieve that with your income alone, then
Mm,
there is a middle ground where you can purchase a percentage of that property and still be somewhat on the property ladder and rent the remaining percentage of that. So that's
mm,
worth mentioning for people that are struggling on an affordability basis, I would say. We tend to find people like one parent families or single applicants, and that fits the bill really nicely for them.
mm,
And the other one that worth mentioning for any first time buyer, self-employed or not, is the lifetime ISA. So
mm,
if you are a first time buyer, you are saving in any stretch of the imagination, then 100% you should be looking at a lifetime ISA. It's
mm.
effectively free money or, tax-free money from the government. So have a look into that. Definitely look to set one of those up if you're saving for a deposit, and thank me later.
Well, there we go. Two useful options there, it sounds like, depending on your circumstances. And that is at the time of recording this episode in August 2025. All the information is correct at the time of recording. So let's continue on then. Now, Paul, bear with me. This is a lengthy question, it's combined. So, okay, so what impact does my business structure have on my mortgage application as a first time buyer? Are there specific requirements for different business structures?
Excuse me. So what impact does it have? I would say
Mm,
quite a big one, but it's mainly based on the way that you're going to have your income assessed by the lender and how they're going to arrive at the figure that they're going to be looking to put into the affordability calculator, which is going to drive how much you can borrow. So that's quite a big thing, right?
mm,
If you're a sole trader, lenders are going to be looking at your net profit, standard as that. If you're in a partnership, they're going to be looking to assess the share of net profit. So if you're in a 50-50 partnership, for argument's sakes, then they're going to be looking at your share of that net profit. And if you're a limited company director, some lenders will use your share of net profit and your salary on top of that. But most are going to look at your salary plus your dividends. And some will even consider retained profits too on top of that. So depending on that setup will really determine and have quite a big impact on the affordability. So definitely worth looking
mm.
into, I'd say.
Oh, okay, brilliant. And a great breakdown there as well. That was a much clearer answer, I think, than the actual
Thank you.
question. So we've got three questions left. So, can business funds be used for the down payments on a mortgage for a self-employed first-time buyer? Just to confirm there.
Okay. Yeah, so technically you can, I suppose, if you've got money in your business, well, that's your money, but it's not as simple as directly using the cash from your business to buy a property, especially on a residential basis, which it would be as a first time buyer,
Mm,
99 times out of 100. But you can draw those funds down legally and pay tax on that. And then that will be effectively your money that's had, post-tax income. You can't just transfer it from your business straight into a property purchase transaction. So yes,
mm.
you can, but as long as you're doing it legitimately through HMRC.
Okay, of course, there's something to bear in mind. Now, moving on, what if I've been previously declined for a mortgage as a self-employed first-time buyer? So what do you do then?
Speak to Henchurch Lane.
There
Um,
we go. There's your answer.
I I couldn't tell you the amount of people that I've spoken to that
Mm,
are first-time buyers and self-employed, or not even first-time buyers, second-time buyers,
mm,
remortgages. People that are self-employed tend to get declined when they're looking to get a mortgage and they're speaking with a broker that doesn't know what they're doing. So don't panic.
mm,
Being declined doesn't mean you can't get a mortgage. It usually comes down to documentation or lender policy, or just broker knowledge. So if you're speaking to a broker that knows what he's talking about, he's going to be able to review where you went wrong and match your situation with a lender that is actually going to be more conducive to lending you money and based on your profile.
mm. Okay, so a sigh of relief there to anybody watching this or listening
Yeah.
to this. Hopefully, that's reassuring. And you've demonstrated there how a mortgage broker can help. So, just lastly, have you got anything else you'd like to add?
Yeah, so we touched on it really there, I suppose, after
Mm,
speaking with people that have been declined, I suppose a good broker is just going to take that stress off of your shoulders as a self-employed person. They are more technical, um, but because we deal with that as a niche, we specialize in that. We know what each lender is looking for and how to package that case up. subject to your specific circumstances. So if you had a particular quirk or nuance within your self-employment,
Mm.
just after, covering that with us, we're going to have a short list of lenders that are going to be more likely to give you a yes. And it just saves you having to go through, jumping through hoops with multiple different lenders and getting no's, which are naturally going to, um, have a negative impact on your mental health.
Yeah.
It's worth just speaking with a broker that knows a little bit more about that employment, really.
Yeah. Yeah, definitely. Well, there we go. We'll end on another positive note there. Thank you for that. Hopefully,
You're
that's proved
welcome.
useful to anybody watching this, listening to this. And Paul, I'm sure we'll catch you on another episode soon.
Thank you for your time, Tessa. Take care.
Take care. Bye bye.